Hello, Chartered. Good morning. Today we are here for paper discussion, and let's start with the discussion of the question test series paper which you had, and this was the question paper. Now, let's read. Let me read the entire paper. Expenses in connection with obtaining a license. Chartered obtaining means purchasing a license for cinema hall is a revenue expenditure. The answer is false. It's a capital expenditure. It's a capital expenditure and it should be amortized over a period of time. First thing, expenses in connection with retaining the title. I have told this earlier also. Obtaining expense obtaining is capital expense. Retaining of an asset is a revenue expense. Now chartered. So expenses in connection with obtaining a license for running at the cinema hall is a capital expenditure. First reason, it's an expenditure to purchase an asset which has long-term benefit. It's a pre-operative expense. And third, it should be amortized over a period of time because its benefit is for more than 1 year. Ratio of forfeited shares is allotment of shares but not sale. Reissue of forfeited shares this is also false chartered. Because it is nothing but allotment of shares only. Sorry, it is nothing but sale of shares only. A forfeited share is merely available to the company for sale. Forfeited shares का मतलब क्या होता है? Shares. When a defaulter fails to pay the money, we cancel the shares. Those cancelled shares, we sell it to somebody else. Allotment means what? Those who have applied, we are giving them. Over here, what is the difference between allotment and sale? Allotment means somebody has applied and we are giving them shares. And sale is we are offering for sale, somebody has to come and buy. So reissue of forfeited shares, we are offering and somebody has to come and buy. That is sale only. In case of reissue, we are not allotting or giving shares to anybody. Am I clear? There is a difference. I have told that my land is for sale. Correct? Those who want to purchase can apply. Thereafter, 5 people apply. I allot the land to one. So sale of it is reissue of forfeited shares is not allotment. It is sale. I am asking people to first buy. After they buy, I can allot them shares. Is that clear? So allotment is a procedure after buying or after selling. Correct? Now charted. Thereafter, it is written in the statement, a forfeited share is merely a share available to the company for sale and remains vested in the company. Vested means with the company for that purpose only. Ratio of forfeited shares is not allotment of shares but only sale, as they have already been allotted earlier to whom? The shareholders. So you can write false by reason number 1. It is a sale and not an allotment. After cancellation, the company is ready to sell it to another. And third, the shares are already allotted to the previous defaulter. Correct? If the effect of errors committed cancel out, number 3 charted, if the effect of errors committed cancel out, the errors will be compensating errors and the trial balance will disagree. Oh no, chartered. This is false. Trial balance will agree. Why? Because if they are compensating in nature, it will agree. There are 2 ways of preparing account current. False. There are 3 ways: interest, product, and balance of product. There are 2 ways of preparing account current. No, chartered. There are 3 ways of preparing account current: interest, product, and balance of product. In case of consignment sale, ownership of goods will be transferred to consignee at the time of receiving goods. False. Ownership will not be transferred to consignee. It will be transferred to the person who is buying the goods from the consignee, and at the time of sale done by consignee. So ownership will be transferred at the time of sale done by consignee, but not to consignee, but to the buyer of the goods. Correct what it is written? In consignment sale, ownership of goods will be transferred to consignee. It will never be transferred to consignee. At the time of receiving the goods, no, it is a transfer of possession, not the ownership. It will transfer to the buyer of the goods at the time of sale. Correct? Yes. In case the due date of the bill falls after the closing account, the interest from the date of closing account to such due date is known as reading interest. True. Correct. Distinguish between measurement concept and matching concept. Measurement concept, account records only those transactions which can be measured in terms of money. It does not record any transaction where money is which cannot be measured in terms of money. It does not account for inflation. Matching concept, account records only those transactions which can be measured in terms of money. It does not record any transaction which cannot be measured in terms of money. Account does not take inflation into consideration. Give few examples of money measurement concept where it cannot be applied, like qual, that of a director. Matching concept, revenue should be matched with, cost should be matched with revenue generated. If we are selling, if we have purchased 100 units, if we have purchased 100 units and we are selling 80 units, if you have purchased 100 units and if you are selling 80 units, then revenue of 80 minus cost of 80. Correct? This is simple. So basically, there is one difference. Money measurement concept value says that accounts Transaction should be valued in terms of currency. Matching concept says cost should be matched with revenue. Now, chart. A machine was purchased for 30 lakhs having an estimated working life of 24,000 hours. The scrap value is 2 lakhs. An anticipate pattern for distribution of effective hours as follows: 1 to 3 years annual depreciation. Total cost is how much? 30 lakh minus 2 lakh divided by 24,000. 30 minus 2 lakh divided by 24,000 into 3,000. 3,50,000. How this is? Into 3,000, same way into 2,600 into 1,800. So you can say after spending, I'll spend 30 lakhs, I'll get back how much? 2 lakhs. I'll spend how much? 30 lakhs. I'll get back how much? 2 lakhs. So ultimately, how much I have spent? 28 lakhs. That 28 lakhs will work for how many hours? 24,000 hours. If 28 lakhs, chartered works for 24,000 hours, so 1 hour ka cost is how much? 116.67. 116.67 is the value of this, and that is nothing, cost of 1 hour. Now chartered 116.67 is the cost of 1 hour. First year I am working how many hours? 3,000. That comes to 3,50,000. Second year I am working for 116.67 into 2,600 is equal to how much? 3,03,333, and the last year is correct. So 116.67 is the cost per hour. First year mein how many hours I work, second year mein how many hours, third year mein how many hours. Every year it is 3,50,000 per annum for first 3 years, 3,03,333 for 4th, 5th and 6th years, and 2,10,000 for 7, 8, 9, 10 years. Am I clear? Yes, no. Yes, sir. 1 minute. Now chartered. Question 2. The cash book of Messrs ABC shows 27,570 as the balance at bank on 31st of March 2017. But this does not agree. Balance at bank, the cash book shows. So this is the debit balance. Subsidy of rupees 10, 250. Subsidy of rupees 10, 250 received from the government directly by the bank, not advised to the company. Subsidy received is an income. Income is received in the bank, not recorded in the cash book. Income should be recorded in the cash book debit side, therefore 10, 250 should be debited. And since we are starting with the debit balance, debit, add. Correct? On 15th March, payment side of the cash book was undercast by 350. Payment side is a credit side. Credit side may be written 350 less. Credit side may be written 350 less. So we are supposed to increase credit side by 350. So this will come on the credit side. Debit, credit, minus. So it should be less. On 20th of March, the debit balance of 2156 previous day was brought forward on the credit side. That means 2156 should have been on the debit side. But 2156, instead of writing on the debit side, I wrote it on the credit side. That means I have made two errors. First error, I did not write 2156. So first, let me write 2156 on the debit side. Second, I wrote 2156 wrongly on the credit side. To rectify, I should write again 2156 on the debit side. That means 2156 into 2, that is 4312, I should write on the debit side. 2156 wrongly I recorded on, I did not record on the debit side. So first it will come on debit side. Second, I wrongly recorded on the credit side. To rectify, again I should record on the debit side. Therefore, I should record on the debit side 2156 two times. 2156 into 2 is 4312 debit. So that comes to debit, add. Correct? Now, a customer, the customer of Messrs. ABC who received a discount of 5% on his account of 2000, who received a discount. A customer received a discount, that means chartered this is discount allowed. On his account of 2000, that means 2000 I was supposed to receive from my customer. I gave him a discount of 5%. So he received a discount, I allowed a discount. Because it is given a customer of ABC who received a discount. So when customer receives a discount, we are given a discount. So chartered on 2000, we gave a discount of how much? 5%. 5% of 2000 is how much? 100. So I was supposed to receive how much? 2000. I gave a discount of how much? 5%. So he will give me how much? 1900. So 1900 should be recorded on the debit side of the cash book bank column, and 100 should be recorded in the discount allowed column. Correct? Hanji. The cashier erroneously, that means by mistake, entered the gross amount. Gross amount matlab 2000 in the cash book. Now chartered debit side of the cash book, he should have recorded only how much? He should have recorded only 1900 on the debit side. But by mistake, he recorded how much? 2000. I repeat, there was a debtor from whom we are supposed to receive 2000. We gave him a discount of 5%. That means our customer received a discount of 5%. 5% of 2000 is how much? 100. So he gave us 1900 and we gave him a discount of 100. So in the cash book debit side, we should write 1900 and 100. But instead of 1,900 on the debit side, we wrote 2,000. That means we recorded 100 extra on the debit side. Hence, 100 should be credited. We are starting with the debit balance, debit credit less. Correct? Yes. Now, chat. On 10th of March 2007, a bill for rupees 5,700. A bill for rupees 5,700 was discounted from bank, entered in the cash book, but the proceeds credited in the bank is only 5,500. That means we had a bill of 5,700 chartered, which we got it discounted. We had a bill of how much? 5,700, which we got it discounted. If we are getting a bill discounted of 5,700 for 5,500, that means 200 is discounting charges. Fair enough? Yes. So how much we got? 5,500. So we should have debited how much? In cash book, we should have recorded how much on the debit side? 5,500. But cash book has, on 10th of March, a bill for rupees 5,700 was discounted from the bank and entered in the cash book. That means cash book has recorded 5,700 only on the debit side. But when we saw the bank statement, we realized that we should have recorded only 5,500. So can I say cash book debit side maybe have recorded 200 extra? So what we are supposed to do? 200 credit. Correct? That is less. Now. So that means I should have recorded on the debit side 5,700, but I have recorded only 5,500. I should have recorded 5,500, but by mistake I have recorded 5,700 on the debit side. So 200 extra I recorded on the debit side, therefore credit 200. And since you are starting with the debit balance, debit credit less. A check issued amounting to 1725 returned marked out of date, no entry has been made in the cash book. Issued check is dishonored. Issued check dishonored chartered. Issued check dishonored. Check issued comes in the credit side of the cash book. Issued check dishonored will come on the debit side. 1725 check issued comes on the credit side of the cash book, that got dishonored. So that should come on the debit side of the cash book. I have not recorded the entry. No entry has been made in the cash book. So issued check dishonored. Out of date means dishonored. Because out of date means basically 3 months were expired, so it got dishonored. Debit, and we are starting with the debit balance. Debit. Add. Insurance premium rupees 756 paid directly by the bank under standing order. No entry has been made in the cash book. Now, insurance premium Insurance premium 756 paid directly by the bank under a standing order. No entry has been made in the cash book. So it's a payment. Payment in the cash book will come on which side? It should come on the credit side. Paid directly by the bank under standing order. No entry has been made in the cash book. So cash book mein insurance premium ka no entry. Cash book mein insurance premium should come on which side? Credit side. It's an expense. We are starting with the debit balance. Debit credit. A bill receivable for 1530. Discounted for 1500 with the bank had been dishonored. If it is dishonored chartered, it is a payment. Pay 1530. But the advice was received. So pay 1530, that means 1530 should come in. Cash book credit. Sir, what does this mean? But the advice was received on 1st of April. We had discounted the bill. Yes. The bill got dishonored. Yes. As soon as the bill gets dishonored, chartered bank will deduct that amount from our bank balance. So bank has already deducted 1530. So passbook has made the entry for 1530. Bank has deducted. Payment is made. But we received the advice on 1st of April the next year. That means the payment of 1530 was not recorded in the cash book. So you'll record in cash book credit. So that will be less. Bank recorded a deposit. Bank recorded a cash deposit of 1550 as 1505. That means that there was a deposit of 1550. Bank has recorded a deposit of how much? Only 1505. That means bank has recorded a less deposit of 45. Yes, no, yes. The bank should record a further deposit. Yes, bank deposit should be credited in the passbook. Credited means less. So after you do all add less, you will get 40,876. 1550 is a deposit. Deposit comes in passbook credit side. Passbook credit side, I should have recorded a deposit of how much? 1550. I have recorded how much? 1505. That means on the credit side of the passbook, I have recorded 45 less. Let me record that. Now, thereafter, Mr. Roy was unable to agree the trial balance and wrote the difference to profit and loss account of the year. Next year, he appointed a chartered accountant who examined the books and found out the purchase of scooter was debited to conveyance account. Purchase of scooter was debited to conveyance account. So I should debit scooter. That is vehicles. To conveyance. Now, a credit purchase of goods. Purchase account was overcast by 10,000. So it will become decrease purchases. So decrease purchase, so credit purchase. Suspense. Correct. Credit purchase of goods from Mr. P for rupees 2000 entered as sale. Credit purchase of goods from Mr. P for rupees 2000 entered as sale. So purchase is not recorded. So record purchase is 2000. Wrongly recorded as sale, that means sale was credited, debit that. To P 4000. Hey, why? P should have been debited because you have purchased goods from P, was entered as a sale. You have purchased goods from P, so P should have been debited with 2000. But since you have entered as a sale, that means you have credited P. Sorry. You should have credited P with 2000 because you have purchased goods from him. The entry should have been, correct entry is purchase to P. You have sold goods. Wrongly entered at sale. That means you would have passed the entry P to sales. That means P is wrongly debited. It should have been credited with 2000. You have wrongly debited with 2000. Therefore, credit 4000. If you want, you can write correct entries purchase to P, wrong entries P to sale. A receipt of cash from Mr. A was posted to the account of Mr. B as 1000. So when you receive, it should have been cash to A. Instead of A, they have written what? Received cash from A. So I've received cash from A, so A should be credited, but instead of crediting A, I credited whom? B. So if you want, you can write correct entry is cash to A, wrong entry is cash to B. Receipt of cash from C was posted to the debit of his account. I should have credited C, received cash from C. So I should have credited C with how much? 500. But was posted to the debit of his account. That means wrongly I debited 500. So I should credit C now how much? 1000. Correct? I should have debited with, I should have credited C with 500, but I have wrongly debited with 500. I should have credited with 500. So correct entry is cash to C. Wrong entry is cash debit as well as C debit. Cash to C, wrong entry is cash debit as well as C debit. Rupees 500 due by Mr. Q was omitted to be taken to the trial balance. Due by Q. Rupees 500 due by Q. Rupees 500 due by Q was omitted to be taken to the trial balance. That means this is my debtors not recorded. So entry will become debtors to suspense. Correct? 500 is due by Q. That means 500 is debtors which has not been recorded. Sale of goods. Number 7. Sale of goods to Mr. M for 2000 was to be omitted to be recorded. All this is simple. M2 sales. So MR. An amount of rupees 2395 of purchase was wrongly posted as 2593. That means purchase 23 kiya. I have written 25. That means I have recorded extra purchases to 2 purchases. Debit. Suspense the difference is 198. Mr. Roy used 10% depreciation on vehicles. So in this amount, it will be 2,700. Correct? Rather 3,000. Conveyance 3,000. Depreciation debit 2,700. Mr. Roy was unable to agree the trial balance last year and wrote the difference to PL profit and loss account of that year. The next year he appointed chartered accountant to examine the following mistakes. So over here chartered, he has transferred the difference to which account? He has transferred the difference to which account? PL account. That means he wrote suspense account. That suspense account, it transferred it to profit and loss account. Last year, it trial balance did not tally. He put the difference where? suspense, and that suspense he transferred it where? PL account. So in this question, after 8 entries, transfer suspense and PL adjustment to capital account. The balancing figure of PL adjustment and suspense both should be transferred to capital account. Correct? Or you can transfer, they had transferred last year PL suspense to which account? Profit and loss account. So this year transfer suspense to PL adjustment. You can do this also. First option is this. Second option is transfer suspense to PL adjustment and transfer PL adjustment to capital, one and the same. Since last year they had transferred, they had written the difference to which account? Suspense account, and then transferred that suspense to PL account. So this year that difference, when you remove suspense, it would be removed from PL account. Now, Manoj of Noida consigned to Kiran of goods to be sold at invoice price which represents 125% of cost. 125% of cost means cost is 100, invoice price is 125. Load is equal to 25. Kiran is entitled to a commission of 10% on sales at invoice price and 25% in excess over invoice price. Now, this is point number A. Point number B. Sales at invoice price means invoice price of goods sold. The expenses on freight and insurance by Manoj were 15,000. So this 15,000 is a direct expense. The account sale received by Manoj shows that Kiran had affected sales for rupees 1,50,000 in respect of 75%. His selling expenses were reimbursed to the extent of 12,000. 10% of the consignment goods of the value 18750 were destroyed in fire. Consignment goods means, this means GSC. This means invoice price. The GSC of invoice price 18750 were destroyed by fire. Okay. So we can say C, 10% of GSC at invoice price is equal to loss. Correct? So chartered, this is very simple. This is question number 3A. Step 1. Calculation of GSC and total load. Now check. %10 of GSC at invoice price is equal to loss. Therefore, 10% of GSC at invoice price is equal to 18,750. 10% of GSC into invoice price is equal to 18,750. GSC at invoice price is equal to 18,750 divided by 10% is equal to no. GSC at invoice price is equal to 1,87,500. GSC at cost is equal to 1,87,000 is invoice price. Invoice price is 125. That cost price is 100. This I had written in the question. Invoice price 125. Cost price 100. So this comes at 1,50,000. So this becomes 37,500. Step 2, sorry. Commission. Now charted how much goods are sold. So this 37,500 is what? Total load. Commission is how much? Commission is sales actual sales at selling price of 75% of GSC is how much? 1,50,000. Invoice price of goods sold is equal to 75% of 187,500. 187,500. 187,500 into 0.75. 146.25. Correct. 140,625 minus 1,50,000 937. This is surplus chartered. Correct? Now chartered commission is equal to 10% of sales at invoice price plus 20. How much? Hmm. 25% of surplus. Now I repeat commission ka sentence. It is given 10% on sales at invoice price plus 25% of any excess realized over invoice price. So that we have calculated excess over invoice price is how much? 9375. So 10% of sales at invoice price, that is equal to 1406 2.5 plus 2343.75, that is 16406. Valuation. Goods center and consignment is how many unit? 1 unit. 1,50,000. Consignment expense is how much? 10,000. So 1 unit is how much? Consignment expenses. 15,000. And goods center and consignment is 15,000. 2,02,500. Loss 1 by 10. 10%. So if I write everything in terms of 100%, how much is lost? 10%. 10% will become 90% will become 182,250. Sold 75%. 75%. One, 136. 136,687. Sorry. 182,250 divided by 90 into 151,875. Now chartered plus 182,250. Now, abnormal loss at invoice price is how much? Abnormal loss at invoice price is 20,250. Load is 10% of 37,500. It is 3,750. Therefore, abnormal loss at cost chartered is equal to 16,500. Correct? And consignment stock reserve is equal to stock reserve is equal to 15% into total load is how much? 37,500. 15% of 37,500. 37,500 into 15%, 5,625. Correct, chartered. This is your entire consignment working. Then you can definitely calculate profit. Profit, and there is a loss of 2,156. And that's it. Chaliye. On 1st January, Akshay draws the bills of exchange of 16,000. 16,000 and 25,000. The bills of exchange of 16,000 is for 2 months, while the bills of exchange for 25,000 is for 3 months. These bills are accepted by Vishal on 4th of March 2018. For 2 months, 25,000 for 3 months. 4th of March, 16,000 wala bill. Vishal request Akshay to renew the first bill with interest at the rate of 15% for a period of 2 months. That means dishonor the first bill. Akshay agreed to accept this proposal on 25th of March. Vishal retires the acceptance for the bill of 15,000, interest rebate discounting being 250. That is retirement of a bill. Before the due date of the bill, renewed bill, the Vishal becomes insolvent and 50 paisa and a rupee could be recovered from his estate. I don't think so. There is something. There are 2 bills, 16,000 and 25,000. The first bill is of 2 months. The second bill is of 3 months. On 4th of March, that is, we are talking about 16,000 wala bill. Vishal request Akshay to renew the first bill with interest at the rate of 15%. Both the bills are retained. Correct. So first you will pass drawing and acceptance. Second is retained, so no entry. Third, dishonor 16,000. Fourth, interest on 16,000 for 2 months at the rate of 15%. Correct. Fifth, fresh bill. Correct. On 25th of March, then honor, that is retire bill of 25,000, rebate 250. Vishal retires the acceptance for 25,000 rebate before the due date of the renewed bill. Renewed bill is also retained. 8. Retain of fresh bill. So there is no entry for this. But what happened to fresh bill? It was retained. Then dishonor fresh bill. And 9 is bad debt. Wala entry. Correct? This is how they're supposed to do. So there is nothing drama in this. First is drawing acceptance of 2 bill. Then both the bills are retained, so no entry for that. Dishonor the first bill. Interest, that is interest wala entry will pass. Then fresh bill, honor the second bill, that is rebate. Retain the fresh bill, dishonor the fresh bill, and bad debt insolvency entry. The following amounts are due to X by Y wants to pay off A on 18th March or B on 14th July. Interest at the rate of 18% per annum is taken into consideration. Okay. So due dates are 10th of January. 10/1, 25/1, 23/3, 17/8. Correct, determine the amount to be paid. And due dates are given directly. So this is your base date. This is your base date charted. Calculate ADD as usual. ADD is coming to 21st May. So first one you are paying before 21st of May, so you will save interest, and second one you are paying 14th of July after 21st of May, so you will pay interest. So in the first situation you will save interest, in the second situation you will pay interest charted. Now, if you want also I can calculate days. This is 0. 10/1 to 25/1 is how many days? 15 days. Then 23/3. 10/1 to 23/3. January, May. 21 days are left. February, 28 days are left. And March, 23. So 60, 71, 72. 18th August, so 21 days of January, 28 days of February, 31 days of March, April, May, June, July, and August 18. So 20, 40, 40, 70, 100, 130, 160, 190, 200, 208, 210 days, 12 days, 220 days. Mm-hmm. 1, 2, 3, 4, 5, 150, 20, 20, 40, and 50. 1, 8, 9, 10, 11, 12. 1, plus 1, 2, 3, 4, 4 plus 8, 12 it is. January, February, March, April, May, June, July. And this is 17. 1 plus 8, 9, 9 plus 1, 10, 10, 11, 12, 12 plus 7, 19. 219 days. Then you calculate average due date. First date of payment is which date? 18th March. And second is 14th July. 18th March, so 13 days of March, 30 days of April plus 21 days of May. So 30, 43, 43, 53, 63, 64 days. Save interest. 14 July. So 10 days of May, 30 days of June plus 14 days of July. That comes to 30, 40, 54 days. Days pay interest. Correct? This interest comes to 119.2 and this interest comes to 100.6. Correct, chartered? Yeah, there's nothing more in this question. Prepare an account current sent by A to B. B in account current with A. Correct? So you are supposed to think from whose point of view? A's point of view. Balance due from B. So we are supposed to receive from B. So to balance brought down. Correct? Yes. Balance due from. We are supposed to think from A's point of view. Balance due from B means receivable from B. Sold goods to B. To sales. B returns goods. B returns goods. So by sales return. B paid by check. So bank to B. By bank. B accepted a bill drawn by A for 1 month. So BR to B 14th March, 17th March. Due date will be 17th March. Goods sold to B. To sales. Cash received from B. Cash received from B. Cash to B by cash. Correct. Now this is simple. You're supposed to calculate days and then do it. Product method. Correct. Now charted. First Jan, say how many days are coming? You're supposed to calculate days from 1st January to 30th of June. The 1st January to 30th of June is coming to how many days? 182 days, 171 days, 125 days, 140 days, 105 days, 62 days, and 46 days. So product charted of every 182 into this is 109, 200, 80, 8, 9, 20. Sorry, by sales return is my sales return is 164 days. So product becomes 20,500. 400 wala product becomes 140 into 400, that is 56,000. Bills receivable wala product becomes 31,500. This product becomes 38, 130, and this product becomes 32, 200. So two product, all debit product is, this is debit side, this is debit, credit, 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 debit, credit. So balance of product will come on 32, 96050. That is credit. Therefore, chartered interest is equal to 96050 divided by 366. Why? Because it is 2016 into 6 by 100 is equal to 15.75, and this interest will come on the debit side. This is debit, debit, credit, 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 debit, credit, and this 15.75 is debit. We find out the balance. Therefore, debit, add all debit, subtract all credit, you will get balance as 225.75. Correct. This was an easy question. Once I told you debit, credit, if you have the solution, fair enough. Otherwise, you got it. If you want to check the solution also, you can take the pick of the solution. This is your true and false solution. This is your distinguished solution. This is your depreciation solution. This is your BRS solution. This is your it's become too tiny. So this is your rectification. Correct. Thereafter, this is a consignment. Working, I have already shown you. Correct. This is your bills of exchange. Half solution. Correct. This is your average due date solution. This is your account current solution. Oh, cool. Correct. Now let's go to partnership. Dinesh, Ramesh, and Naresh are partnership sharing profit and losses in the ratio 3:2:1. Their balance sheet as on 31st of March 2018 is as below. Correct chartered? Yes. Trade payables, outstanding liabilities, general reserve, capital account, land and building, furniture and fixture, closing stock, trade receivables, cash in hand, cash at bank. The partners have agreed to take Suresh. Suresh shall bring 8,000 towards capital. So journal entry. 1 minute. Journal entry for this will become chartered. Value of stock to be increased to 14,000. Increase rupees 14,000. Closing stock is how much? 12,600. So increase by. So this will come in revaluation credit. And the furniture to be depreciated by 10% is equal to 720. This will come in revaluation debit. Why? Because it's a loss. Provision for doubtful debts to be provided at 5% into 20, 10,000. 10,700 is equal to 535. This is revaluation debit. Correct? Yes. The value of land and building to be increased by 5,600. Increased by credit revaluation. Value of goodwill to be fixed at 18,000. Gaining partner to sacrificing partner. You're supposed to calculate. I say table entry. Table entry means, I'll tell you, what is the old profit sharing ratio? 3:2:1. And the new profit sharing ratio is equal. Goodwill kare? Karo. So, who are the partners? Dinesh, Ramesh, Suresh. I'm doing treatment of goodwill chartered. So goodwill is how much? 18,000. So 18,000 in old ratio, that is 3:2:1, 9, 6. Naresh. Nine, 6, 3. Then they admit Suresh. 18,000. That's 4.5. So who has sacrificed? Suresh has sacrificed. Dinesh has sacrificed how much? 4,500. Ramesh has sacrificed 1,500. Naresh has gained 1,500. Suresh has gained 4,500. Correct? The outstanding liability include rupees 700 due to Ram, which has been paid by Dinesh. So, its journal entry will become outstanding liability to Ram 700 700. So, Ram's capital account credit side, sorry, is paid by whom? Dinesh. The outstanding liability to Dinesh, Dinesh's capital account credit side, and balance sheet may less from outstanding liability. And mind you, chartered, this entry will not come into revaluation because some people have a rigidity. Liability is increasing, decreasing, revaluation. But the journal entry is complete over here. It has nothing to do revaluation. This liability is definitely decreasing, but decreasing not because of revaluation, but payment by a partner. If a liability is increasing or decreasing because of change in reconstitution, then it will go through revaluation. Suppose you pay off creditors, then also liability will decrease. No. Will you take it to realizer? Will you take it to revaluation? No. And understand one more thing. The journal entry is what? Outstanding liability to Dinesh. Where you can see revaluation over here. So just take out from their mind some people who believe that liability decreases revaluation. So think logically, don't mug. Outstanding liability to Dinesh. The journal entry is complete. So outstanding liability will decrease in balance sheet liability side and Dinesh's capital account is credited. In this journal entry, you cannot see revaluation. So where will you post it? Oh, correct. Yeah. And thereafter it was simple. Let me just show you the solution also. This is revaluation account. Correct. This is a capital account. In capital account charted, these are balancing fields. See this 700. It does not come in revaluation. Yeah, no. This is the journal entry treatment of goodwill we have done. I have shown you already. This is balance sheet liability. See. Nothing more. Simple. And this is cash account 8,000 capital which you got it. So that 50% mandatory, or we can round it off to the nearest rupee. Yeah, you can round it off. But make sure that when you're rounding off, your balance sheet should tally. It should not have 1 rupee difference. Now, the trial balance, the capital account. Capital account, liability, trading debit, return inward. Return inward is sales return, trading, purchase return, trading, PL, balance sheet, asset, liability, bank loan, liability, bank interest. 14% is 1,400. Okay, printing and stationery, PL, asset, PL credit, asset, PL debit, insurance, PL debit. It's a premium, not claim. Postage and telegraph, PL, cash balance, balance sheet, traveling expense, PL, and drawings less from capital. Correct charted? Yes. Now, provision for doubtful debts is to be created at 5%. Okay, and 2% on debtors. So that is very simple. Debtors say you subtract 5%, you subtract 2%, and that provision will be transferred to P&L. There is nothing doing over here. Don't apply any supersonic brains. Debtors, less provision for discount. Less provision for doubtful debts, less provision for discount, and both provision you transfer it to PL debit, game over. Personal expenses of Kumar had been recorded in the purchase day book. So entry will become drawings to purchases. So this will be added to drawings, and this will be less from purchase. Now some students, since it is purchase day book, no, creditor should also be affected. Why that? You have purchased goods on credit. Are you supposed to pay him? Yeah, so you pay him. No. It has been recorded in the purchase day book. That means correct entry should have been drawings to creditors. Wrong entries purchase to creditors. Oh, so you are supposed to anyway pay that person. So some are rigid. So since it's a purchase day book, I want to do something with creditors, not always. If there was an error over there, you could have changed it, but there is no error. The correct entry is also drawings to creditors only. So correct entry is drawings to creditors. Wrong entry is purchase to creditors. You are somehow supposed to pay that person. So you are not supposed to do something with it. Depreciation, no problem, included among the debtors 1,500 from day and included among the creditors 500 due to him. So less 500 from debtors plus creditors. This is from. Now, I was supposed to, there was this person, Dayland. Correct. There was a person, Dayland, from whom I'm supposed to receive 1,500. And to Dayland, I'm supposed to pay 500. So receivable how much? 1,500. Payable how much? 500. So I will say 500, I will set it off. So receivable will become how much? 1,000. Payable will become how much? 0. Payable is a liability decreasing by 500. Yeah. Receivable is an asset decreasing by 500. Yes. So payable and receivable both are decreasing. Yes. So both should be decreased by 500. Yes. Payable is creditors. Receivable is debtors. So both are decreasing. A quarter of the amount of printing and stationery should be carried forward to the next year. Printing and stationery. Yeah. Prepaid. Quarter. 1,800. Credit purchases has been omitted from the books. Purchase to creditors. That means add to purchase, add to creditors. Stock. This is closing stock. No worries. Now, bank loan is how much? Entire year ka interest? 1,400. Paid is how much? 550. So 850 is outstanding. This will go in liability. And this will go in PL debit. Correct. On 10,000, you're supposed to pay 14% interest. 14% interest on 10,000 is 1,400. You have paid how much? 550. The remaining 850 is outstanding. So on PL account on accrual basis, you are supposed to write entire year's interest. That is 1,400. And in balance sheet liability, you will show 850. Correct? Yeah. Anything else? No. Easy? Yeah. No. This is your trading and profit and loss account. This is your trading and profit and loss account chapter. Sir, if it was wages and salaries will come in trading. Sir, if it is trading expenses, it will come in P&L. Fair enough? Yeah, correct. This is your balance sheet. No, only profit and loss. Now, Chartered, this question is not in your syllabus. You're not supposed to do it. No. Yeah, this is not there in your syllabus. You're not supposed to do it. Forget it. This is your manufacturing account. Opening work in progress, debit, credit, working note. My opening raw material is how much? 170. Closing raw materials 190, so minus 190. Purchase of raw materials, so add 820. Higher charges of machine, this will come in debit. Higher charges of factory will come in debit. Direct wages contracted, a higher charge of 60 per unit manufactured. Manufactured means produced, that is 5 lakhs. Contracted 80% per unit manufactured and 40 paisa per units of closing WIP. Closing WIP is 12,000 units. Repairs and maintenance debit. So this will become minus 28 lakhs. Raw material consumed. So it will come on debit side. Fair enough? Let's see. This is your manufacturing account. Opening WIP, raw material consumed, they have taken out. They have done over here. Opening at purchases less closing 8 lakhs. 4 lakh 4, 3 lakh. Working note. And this is balancing figure. Units are not balancing figure. Units are just disclosure. This is balancing figure. This will come in trading account debit side charted. This will come in trading account debit side now. So 60 paisa, higher charges will become 60 paisa. 60 paisa into this will become 3 lakhs. Direct wages 80 paisa. 80 paisa 4 lakhs and this will become 4,800. Let us check. Direct wages 4 lakh 4,800 and 3 lakh. That is 4 lakh plus 4,800 they have added. Fair enough. If you want, you can take a pick. Correct. So we are done with question number. From the following, let's prepare a trial balance of Amrita Traders. Credit, credit, debit, debit, discount allowed debit, expenses debit, trade receivables debit, payables credit, investments debit, cash in hand and at bank debit, interest received on investment income credit, insurance paid debit, expenses. Capital is capital, sales is income, this is expense, this is expense, this is expense, this is expense, this is asset, this is liability, this is asset, asset, income, expense. Here you are, the trial balance. Shall we move ahead? Yes. Now chapter. X Limited forfeited 300 shares of rupees 10 each fully called up. Okay. Called up is 10. Held by Ramesh for non-payment of allotment 3 and final call 4. So paid is 3. He paid application of money. The shares were issued to Suresh for rupees 8 per share. So the journal end. This will become simple. Share capital 300 into 10, 3000. 2 calls in arrear 300 into unpaid 2100. 2 share forfeiture 300 into 3 900. Bank, how much? The shares were reissued 300 into 8. 2400. Share forfeiture 8 may have reissued. That means discount is how much? 2 rupees. So 300 into 2, 600. 2 share capital 3000. Share forfeiture 2 capital reserve. How much? Share 900 minus 600, 300. Or you can say per share gain is 3 rupees. This one is per share gain. 10 rupees ka shares they have reissued at 8. Therefore, per share loss is 2. Net gain 1 into 300 shares. Now you can see how much he has paid for the first time. So 3 rupees. How much he has paid for the second time? First time when we issued the shares, how much did we get? 3. Second time when we issued the shares, how much did we get? 8. So total, how much did we get? 11. What is the cost of the share? 10. What is the profit per share? 1. First time when we issued, we got application ka 3. Then we reissued and got how much? 11. So first we got 3, then we got 8. So total we got how much? 11. What's the called up value of the share? 10. So 10 rupees ka share, we got 11 rupees, 1 rupee profit. Transfer that profit. Okay. Called up is how much? 7. Naresh had paid application allotment money of rupees 5. So paid is 5. Unpaid is equal to 2. Of these 150 shares were reissued as fully paid. So over here, called up is 10. Fully paid up. Therefore, called up is 10. Reissue price is 6. Therefore, discount is 4. Correct? And if you want to find out capital reserve, then you have gained 5 and you have lost 4. So net gain is 1. 1 into 150. 1 into 150. Therefore, capital reserve capital reserve $150. You have gained 5 rupees, you have lost 4 rupees, therefore capital reserve is 150. And now you understood this is your called up, unpaid, paid. This is your reissue price. This is again your called up, and this is discount on reissue. So second journal entry, you know you're called up, unpaid, paid. You know you're called up for reissue price, discount, share for and forfeiture. What do I say? Capital reserve is per share gain of 5, per share loss of 4. So net gain is how much? 1 rupee. And that you issued it to how many shares? 150. X Limited forfeited 100 shares of rupees 10.6 called up, issued at a discount of 10%. This is not there in your syllabus, so forget it. Pure Limited 9.4, so 1 lakh into 9.4, that's 60% discount. Therefore, discount is equal to 1 lakh into 60 paisa, that is 60,000 discount, which you are supposed to write it off over a period of 5 years, redeemable at the end of 5 years, divided by 5 years. Therefore, every year you will write off 12,000 discount. Total loss is how much? 1 lakh debentures. Each debenture you have issued at 9.4. That means there's a loss of 60 paisa on every debenture. On 1 lakh debenture, there's a loss of 60 paisa into 1 lakh, that is 60,000 rupees. That 60,000 rupees is to be spread over a period of 5 years. So each year 12,000. Now, a trader prepared his accounts on 31st of March each year. Due to some unavoidable reasons, no stock taking could be possible till 15th of April. Okay. Correct. So this is 31st of March. And this is 15th of April. On which the total goods came to 50,000. The following facts are established. Sales, including cash sales of 10,000. Sales return is 1 over here. So can I say sales is chartered 40,000. It is sold after, so it was year. It is sold before 15. So it is no over here. You sold after 31st of March. So on 31st of March, you had those goods? Yes. You sold it before 15th of April. So on 15th of April, you did not have those goods? Yes. You're moving from no to yes. So it should be added. One minute. So it should be no to yes, add. But you'll add cost of goods sold. Not 40,000, but cost price of 40,000. Purchase 5034, including cash purchase of 1990. So you have purchased over here. So you purchased after 31st of March, it was not there. You purchased before 15th of April, it was there. So from 15th of April to year end, you are moving from yes to no, you will less. So this will be add. This will be less. Now, on 15th of March, goods of the sale value are sent on sale or return. Basis to customer and the period of approval being 4 weeks. Okay. He returned 40% of the goods on 10th of April. Okay. Approving the rest. The customer was billed on 16th of April. Now, chartered. I'm talking about adjustment 4. 31st of March, 15th of April. Now, we had sent him goods over here, sale on approval. So the goods were not over here. Yes. 40% of the goods, he returned 40%. And the rest are still with him? Yes. So 40% is returned, so 40% is over here? Yes. So from yes to no, we are moving. Yes to no, if you are moving. Still an approval? The period of approval, he returned 40% of the goods on 10th of April. So 40% of the goods he returned. Correct. 40% of the goods he returned. Correct. Hmm. Hmm. So if 40% of the goods are returned, so 40% is physically there, and 31st of March. Tenth of April, the rest the customer was billed on 16th of April. Okay. So if it was there on 15th of April, if it was sent on 31st, now chatted. If it was sent on sale on approval, correct? If it was sent on sale or approval and till 31st of March, no information is received, we assume it should be there on this, correct? So 60% should be also here. Now understand carefully. March 15th of April. There are two types, 40% and 60%. 40% is returned, 60% is approved. But everything happened after 31st of March. So on 31st of March, both stocks should be there. Yes. Because both the information we received after 31st of March. So as on 31st of March, the year end, we should have got both the stock in our book value. Book value wala stock, both the stocks we should have. Yes. Are you understanding? We had sent the goods before 31st of March. We had sent the goods on 15th of March. On 31st of March, no information was received. Therefore, entire goods should have been there in my closing stock. But are they lying physically in my godown? No. Fair enough? Yes. These goods were returned. So is it physically there? Yes. So yes, forget it. Are the goods returned? No. These are approved. So are they on 15th of April? No. So from no to yes, you are moving. It should add 60%. Okay. This 60% should have been there in your stock on 31st of March. But that 60% approved on 16th of April. Approved wherever. But the stock is with customer or with you? Customer. So on 15th, physical stock, is it there? No. So physical stock of 15th of April, it is not there, but in financial stock, book value of stock, it should be there. Correct? Yes. So will you add 60%? Cost of 60%. Okay. Trader had also received goods costing rupees 8,000 in March for sale on consignment basis. That means we are consignee. 20% of the goods have been sold by 31st of March. No. Now charted. This is 31st of March. 15th of April. Okay. Now, received goods costing rupees 8,000 in March for sale. 20% of the goods sold by 31st of March. 20%. Should it be there? No. Is it there? No. So forget 20%. Since I am consigning, it should not be there in my book value. This is financial stock. Sorry. Physical stock. 15th of April. 15th of April. Physical stock means this stock is there? No. Why? Because it is sold. Okay. Another 50% is sold in April. Okay. So should it be there? No. No. Another 30%. No, it should not be there. But it is there. So yes to no. Less. 20% should not be there. It is not there. 50% should not be there. It is not there. 30%, it should not be there, but it is there in my physical stock. Therefore, remove it. Correct? Yes. Sure? Yeah. Solution. First part, which I had solved. The second part, and the third part is out of the syllabus. Ratio we have done. And this is a closing stock. This 80% means bringing to cost. This is cost of goods entered. Or you can say 6,000 minus 20%. This is nothing but 40,000 minus 20% of GP. Correct? Yeah. Okay, chartered, we've discussed the entire paper. The doubt session will be there at the desired time. Thank you so much.